Hello, my name is Wilkinson, and this afternoon I'm going to talk about the second instalment of Super Manager and how it works for you, the investor. You might recall last week we spoke about the concept of Super Manager and how we can consolidate all of the superannuation funds together into one family superannuation fund. This week I'm going to talk about the protection that's afforded by this concept. People often think, okay, what happens in the event if something goes wrong or someone passes away? What will happen to my monies? What will happen to my estate? The vehicle we're talking about here, Super Manager, has a whole lot of inbuilt protections. The first thing is that in the event of two trustees, you can see them here, I've actually put a cross above one of the trustees who basically demised, passed away. So in this case, this trustee also has life insurance. So coming into the cash account firstly, will come in the life insurance payment from the institution. That will flow into the cash account. At the same time, the cash account is also receiving dividends from shares, interest payments from cash, and rental payments from properties, which are owned by the superannuation fund. So the cash account is continuing to swell with cash flow as it comes in. At this point, we have discretion about how we deal with the payments. For instance, if something has occurred whereby the payment received has been as a result of life insurance, the money coming into the account will pass to the ownership of the remaining trustee. In this case, that trustee has choices in terms of how they pay out the monies. They can choose to pay out some as a lump sum payment, tax-free. Alternately, they can decide to pay some out as a lump sum if they needed to. Alternately, just pay out a pension income stream. Once again, tax-free to meet the lifestyle payments that the remaining person has to deal with. The beauty of this structure is that if there are some other issues outside, such as if there was a business failure or some outstanding debts, the protection elements apply. If you had a situation where they were threatened by this person here who passed away was going into bankruptcy, then the monies could remain in the superannuation fund and only be paid out by way of pension payments to the remaining trustee, thereby thwarting any ambitions that the trustee might have of actually recouping that debt. I should say that the trustee in bankruptcy has of recouping that debt. So that's one of the flexibilities this affords. Alternately, you can, if you wish to, bring in younger members of your family as the next generation of the fund. And they can step into a trustee role and start to assume the stewardship and mantra of looking after these assets here, which are in the fund. So today, I wanted to touch on some of the estate planning and protection aspects that are actually offered by this unique concept called Super Manager. Thanks for your time.